The day it happens doesn't start with bombs or a stock market crash. It starts with an email. You're standing in the kitchen, half dressed for work, coffee going cold on the counter. Your phone buzzes. Subject line: Important notice regarding federal payments. You think it's spam. Then you see who it's from. U.S. Department of the Treasury. Your heart rate picks up a little, you open it. Due to an extraordinary funding situation, your upcoming federal payment may be delayed. Social Security, veterans benefits, federal salaries, tax refunds. All the language is dry, sterile, careful. But the message underneath is brutal. The check you've always counted on might not be coming, not on time, maybe not at all. On cable news, it sounds almost abstract. The United States has officially defaulted on its debt for the first time in history. Politicians are arguing about whose fault it is. Analysts are talking about bond markets and yield spreads. But in living rooms across the country, it's not abstract at all. It's the 74-year-old widow in Florida whose only income is Social Security, staring at her laptop, realizing rent is due in a week and there is no backup plan. It's the Army sergeant at Fort Hood, refreshing his bank app and watching his balance stay exactly the same on payday. It's you, logging into your 401k just to see what's happening and feeling your stomach drop as the numbers bleed red. Within hours, the world stops treating America like the safest bet on Earth. For decades, U.S. Treasuries were the rock at the bottom of the global financial ocean. The thing everyone trusted. The thing that never, ever failed. Today, that rock cracks. Overseas, investors start dumping U.S. bonds. Just to be safe, they say, yields spike. On Wall Street, that shows up as numbers on a chart. On Main Street, it shows up as something much uglier. Your credit card company quietly emails you. Due to changing market conditions, your APR is being adjusted. 12% becomes 18, then 23. Car loan offers that were 3.5% last month are suddenly 9%. Mortgage rates shoot up in a week more than they used to in a year. If you were just about to buy your first home, you're done. The same house, same salary, same down payment. But your monthly payment just jumped hundreds of dollars because your own government couldn't pay its bills. The default doesn't mean the U.S. is out of money. It means the system that everyone believed in. Investors, banks, retirees, foreign governments, no longer believes in America's promise to pay on time, every time. And once trust is gone, everything gets more expensive. On Wall Street, trading floors are a zoo. Circuit breakers flip. The Dow free falls, then bounces, then falls again. In a single brutal week, decades of savings vanish from retirement accounts. A teacher in Ohio logs into her pension portal and sees a notice. We are experiencing unprecedented volatility. Your balance may fluctuate significantly. Fluctuate is a nice word. She just lost the equivalent of a new car. A factory worker in Michigan jokes darkly that he'll die at the machine because retirement just walked out the door. Supermarkets don't list U.S. debt default on the receipts, but you feel it there too. The dollar, suddenly less trusted, slips on the world stage. Importing food, fuel, electronics, everything gets pricier. A bag of groceries that cost $80 last month is $92, then $98, then over $100. Gas creeps up by 20, 30, 40 cents a gallon. No one announcement explains it. It's just this slow, grinding squeeze. At the big companies, memos start circulating with phrases everyone recognizes from 2008. Cost containment, hiring freeze, restructuring. At first, it's contractors whose badges stop working. Then it's whole departments getting the dreaded calendar invite. Mandatory meeting, HR and leadership. In one suburb, a dad comes home early, holding a cardboard box with a plant and a photo frame. The kids see his face and know before he says anything. His job wasn't outsourced or automated. It was vaporized by a crisis he had zero control over. Meanwhile, in Washington, the cameras capture rage and speeches. On the ground, what people feel is something else. Helplessness. A small-town banker has to sit across from an elderly couple and explain that their CD is safe, but the bank can't renew it at the old rate. "We can offer 4.5% for now," he says, knowing next week that number might need to be 7%, then 9%, just to keep deposits from fleeing. A single mom in Phoenix who has always paid her bills on time discovers her credit card limit has been cut in half overnight. Risk management, the notice says. She doesn't buy luxury goods. She buys groceries between paychecks. Now that buffer is gone. Federal workers become the canary in the coal mine. At the VA, a nurse who's already burned out from years of staffing shortages checks her pay stub and sees zero. Back pay will be issued once the situation is resolved, the system says. She looks at her rent, car payment, child care, and thinks, resolved by who and when? Some stay on the job out of duty. Others call in sick and start driving for rideshare, delivering food, anything that pays today instead of someday. Lines at food banks stretch longer. These are not the people you expect to see there. They're office workers in Target polos, federal clerks wearing ID lanyards, retirees with good manners and hollow eyes. Credit tightens like a noose. A small restaurant owner goes to his bank for the usual short-term loan to make payroll. The manager shakes his head. "We're not approving new small business credit until things stabilize." He walks back to his kitchen and looks at the faces of the dishwasher, the line cook, the server who's been with him for 8 years. He has enough cash for maybe one more pay period. After that, he doesn't know. Local governments, who always counted on federal money showing up, start canceling things quietly. A bridge repair project is postponed. A planned expansion of the community health clinic is under review. Grants for after-school programs and drug treatment get temporarily paused. This is how a national debt crisis becomes potholes you hit on your way to work and a closed sign on the clinic you were going to call about your depression. The scariest part is not the chaos of the first week. It's the realization, 1 month in, that this isn't just a bad headline. It's a turning point. For your whole life, the story you were told is simple. America has problems. Big ones. But the dollar is rock solid. Treasuries are safe. The government always pays its debts. That story is part of the invisible foundation of everything. Your mortgage, your retirement plan, your job, your grocery bill, the interest rate on your student loans. Now, sitting at the kitchen table with a pile of bills, you understand something your grandparents understood during the Great Depression. When trust in the system breaks, it doesn't break evenly. The rich call their advisors, shift assets, move money offshore. The well-connected get early warnings and special terms. Meanwhile, the people who live paycheck to paycheck, who don't have a second passport or a Swiss account, absorb the hit in rent hikes, job losses, shrunk pensions, higher interest, and quiet, grinding anxiety. You still get up, you still go to work, kids still go to school. Football games still happen on Sunday. Life doesn't stop, it just feels tighter, more fragile. Like you're walking on a glass floor that used to feel like concrete. Economists will write papers about this moment. Politicians will give speeches about reforms and restoring confidence. But years from now, when someone asks you when things changed, you won't think of charts or bond yields. You'll think of that morning in your kitchen, coffee going cold, email open on your phone. The day you realized your own government's promise, full faith and credit of the United States, was not a law of nature, it was a choice. And one day, they chose not to keep it.